Welcome, everyone. Welcome to Take Stock Live. Going live here every Wednesday, 15 minutes after market close. We're well into the second season now, running every Wednesday into October, is the plan. So next week, we're looking forward to, I should toggle off and let you see it. Looking forward to welcoming Conduit IR back for a special episode featuring North Star Gold and Probity Capital Corp. We'd like to thank, in particular, the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in this very unusual time. We'd also like to recognize the vital support provided by our core sponsors: Fasken, MNP, Lee Jones Gable, Olympia Trust, and the CSE, who helped us launch the forum back in 2014. Thank you also to our extended network for their support in launching this new initiative: Calgary Meg and CIM, the Manitoba Saskatchewan Prospectors and Developers, and many more. In particular, we'd like to thank Investmentpitch Media and the Newswire for getting the word out. Now, getting down to business, I'd like to welcome all of you, our attendees and guest presenters. Note our disclaimer: this presentation is for information only. It's not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock, and TakeStock and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present. May consult to the companies, and also make no representation or investment or other recommendations in regards to these presenting or any other companies. You should definitely do due diligence and seek professional investment advice. Some housekeeping matters also for attendees. You will note a red button on your screen up at the top. If you lose audio or have any other sort of glitch, just click it and you'll be reconnected pretty quickly. Normally we run just under 45 minutes, but today, after the Q&A formal panel portion, will allow extra time, if need be, for further questions, which you can feel free to fill in on the chat board. We'll be utilizing them this session, but please be clear about whom you're addressing your question to. Each company will give their presentation. After the three companies have presented, we'll be following that with a panel discussion moderated by Alan Turner of the Calgary Mineral Exploration Group, MEG. We encourage you to connect with companies directly in order to get detailed information. Contact details will be given at the end of the session. Today, we're presenting the three companies in association with Sterling Capital, a Calgary-based investor relations company that focuses on mining and has been in operation since 2005. With us today is the president of Sterling Capital, Sam Greer. So, welcoming you, Sam. I'll hand it over to you now. Thank you.
Thanks very much, Raj. It's an absolute pleasure to be here once again, and thanks for having us. We've got three very solid mining stories we quite like at Sterling. Bluestone Resources, which is an international resource company with a gold and geothermal project in Guatemala. Lumico Metals, which is a high-grade graphite company focused on Quebec. And Hawkmoon Resources, which is a pre-public gold story that is also focused on Quebec. Representing Bluestone is Jack Lundeen. Jack brings with him a recognized legacy and years of experience of technical and economic expertise. Jack has held international prospecting and field technical roles with the Lundeen Group, and has experience working as an analyst in the commercial banking department for Lundeen Norway. Jack has a Bachelor of Science in Business Administration from the Chapman University, a Master's of Engineering degree from the University of Arizona, and also sits on the board of directors for Josemarie Resources and Denison Mines. Representing Hawkmoon is the CEO and founder, Brandon Haynes. Brandon has 20 years experience in the finance and junior markets. He has worked as an investment advisor with Octagon Capital, as well as a successful fundraiser with multiple mining companies. And Paul Gill, the CEO of Lomiko, will be presenting the third story. Paul's had a very successful career in the mining sector, including his time with Northmount Mining, which he grew from a market cap of $1 million to a buyout by Hudbay for $512 million back in 2011. As you can see, we've got three very high caliber mining executives here. And without further ado, Jack is going to lead the first presentation. Jack, Thank you very much for being here. Welcome.
Thank you very much for having me, Sam. Appreciate being online, and I'm honored to present to you all today. So prior to me presenting, I'm just going to take my screen away so you can fully see the slide deck. And I've only got a finite amount of time here, I think 6 minutes, so I'll get right into the presentation and really take you through the core business of Bluestone Resources, which is our flagship Cerro Blanco high-grade gold project in southern Guatemala. I will be making several forward-looking statements, so please be advised. Really, this slide is just to set the stage for what it is I'm presenting to you today. We have a compelling investment opportunity in the fact that southern Guatemala and the Cerro Blanco gold project that we have in this jurisdiction is permitted already, and it's a very high-grade resource sitting at 1.4 million ounces at around 10 grams per ton, and we're currently growing that resource further, which I'll talk about in a couple minutes here. But because of the work that's already been done on this project, and because of the high-grade nature of the deposit, it is a very robust operating cost, and therefore we will be generating significant free cash flow due to the fact that there's already been a significant amount of capital sunk into the project. And really, to sum it up, Bluestone Resources is an emerging gold developer that we look forward to advancing at a rapid pace and bringing the Cerro Blanco deposit from the phase that it's in now through development and into operations. So just a quick snapshot of Bluestone Resources. We acquired the Cerro Blanco deposit, 100% of it, in May 2017. Since then, we've been continuously drilling out the deposit and growing our resource. And in January of last year, we came out with a feasibility study that demonstrated extremely robust economics, and therefore we're continuing to drive this project forward and get ourselves into the next phase, which would be full swing construction. Currently, we are continuously drilling. We're working on our engineering and planning for development. We're also in parallel working on the project financing package in order to fully fund the development. I joined as CEO in January of this year, and prior to that, I was working on the development of the Fruta del Norte gold project in southern Ecuador with Lundin Gold. Jurisdictionally, this is a project that's located in the southern part of the country. You can see in the center of this slide here, Guatemala City is about 2.5 hours by road down the Pan American Highway to the nearest town, which is only about 6 kilometers away from our project site. So we've got significant amount of infrastructure in place that really gives us an advantage when we need to be bringing in supplies and transferring out supplies. So we're situated in this region here, and the picture that you're seeing is an aerial view of the existing infrastructure already in place. And you can see the area in which Cerro Blanco is surrounded by is mainly agricultural land with farmers and ranchers, and we already have a very significant system in place for community relations because of the work that had been done over the past 2 decades. This deposit was discovered in the late 90s, and therefore it's been well socialized to the community, and they are looking forward and keen to see the opportunities that arise when we go to development and operations phase. So touching on the feasibility study economics, they really do speak for themselves here. I won't go through all of the nitty-gritty details. You can get this corporate presentation online, but really we're contemplating a 8-year mine life, which we're very confident will increase as we continue to drill out the deposit. And because of the work that's already been done and the high-grade nature, there's a low initial capex and a low operating cost. All of that culminates into very robust economics, which give us around a 34% IRR at a $12.50 an ounce gold price. Gold prices today are touching 2,000, so you can see in the bottom right-hand side, the IRR really shoots through the roof if we're using today's gold price. And the payback period is very, very short, which means we'll be in a position to generate some very strong free cash flow, put money back into the ground to grow that resource, grow the mine life, and ultimately use Cerro Blanco as a company starter in the gold space for Bluestone Resources. We have several exciting catalysts coming our way in the next few months. Ongoing drill results as we continue to drill out the deposit, project financing. We currently have 60 million in the bank, which will get us well into the beginning part of our construction phase. But we're also working on a debt facility as well that we hope to finalize in Q3 or Q4 of this year. We've identified the equipment that we need for our mobile mine fleet as well as our surface infrastructure, and so we'll be looking to place long lead time orders in the fourth quarter of this year. And we want to initiate early works, which is pre-construction activities, towards the end of this year, so that next year we can get ourselves into the construction phase, ultimately producing our first gold bar targeted for the second half of 2022. Our resource estimate will be updated towards the end of this year or early part of the next year as we continue to drill out the deposit. And as I said, the feasibility study contemplates an 8-year mine life, but we firmly believe we can get that to 10 plus years based on the results of our drilling. Now a little bit of promotion. You see our stock and where we're at in terms of the market cap of our company. I think we closed today at around 340 million Canadian. And please look, I'll direct you to the blue bar chart below, where you can see the different companies in which we're stacked up against. So these are our peers in the space. And you can see that our market cap is around 340 million Canadian, but we are going to be generating an average free cash flow of 70 million Canadian throughout the life of this mine. So when you look at the free cash flow versus our market cap, we definitely have room to grow amongst our peers. It's a good indicator to see that now is a good time to get into the Bluestone story. And hopefully that was within 6 minutes.
That's good. Thank you.
Thanks a lot, Jack. And at this point, I'd like to introduce our second presenter, Brandon Haynes, the CEO of Hawkmoon. Brandon, please take it away.
Oh, your mic.
Sorry about that. That's better.
We can hear you.
I'll toggle off my video and get started. So I'm the CEO and founder of Hawkmoon Resources. The company represents an early blue sky investment opportunity in Canada's resource sector. We incorporated in 2019, and Hawkmoon Resources is focused on gold exploration in Quebec and our Romeo project. We're offering IPO shares at 10 cents with a full warrant at 15 cents, good for 2 years. The company is still private, and we've currently filed the prospectus, and we're looking forward to a public listing. Projections-wise, we're thinking possibly October of 2020. A little bit about myself, 20 plus years in finance. I was a retail broker. I've been a stock promoter, and my biggest success was Minefinders, MFL on the TSX. We went from $1.50 to $14 before being acquired by Goldcorp. Now, the company's main rock star is Thomas Clark. He's our VP of Exploration, longtime friend. Got his master's degree in geology and science from Johannesburg, and he's taken lead in Russia for Bema Gold. He's found deposits in Russia, Guyana, Peru, and Madagascar. But the most important find from Tom, for Hawkmoon's point of view, is the Gladiator deposit, which is part of Bonterra Resources. That's a 1 million ounce deposit. Tom also holds a 1% NSR with Bonterra and the original claims. Our property, Lac Romeo, is to the north, and it's strategically situated in the Belmont Township of Quebec. You'll see here from the map that it's next to a Cisco Mining near their Windfall Lake gold deposit, as well as the Bonterra Resources properties. Now, this Romeo project consists of 53 mining claims, about approximately 2,984 hectares. It has a 43-101 technical report completed. We've spent 105,648 on it, and we do meet it as a listing property in order to qualify for a CSE listing this year. Romeo has great year-round access, and it's got excellent equivalent potential to host economic gold mineralization in quartz veins. Now, currently, as of right now, we have a phase 1 underway. We've cleared overburden with an excavator over the last couple of days. We've got 3 anomalies there in the southwest portion that are adjacent to Cisco Mining's Windfall. And we're bringing up assay samples, which we're sending to the ALS labs nearby Val-d'Or. So there'll be results coming from that in the Q3 of this year. When you're a private company, the highlight that most investors are interested in, obviously, is the share structure. After listing on the CSE, we plan to purchase other projects in Quebec. We intend to complete a $5 million raise next year at a higher price. We're going to acquire a 1 million ounce deposit and then hopefully be able to sell that to a senior partner as an exit strategy. This kind of disposition can advance our properties through potential joint venture, option agreements with an intermediate or mining major operator to advance projects to a mine decision. Other benefits are the cash considerations to Hawkmoon, investments to advance exploration work, NSR, and to our shareholders continuing to benefit from future production revenues. So as you see here from the share structure, we've got 26,499,510 shares out as of today. The founders' shares are all escrowed for 2 years, and the seed shares there are pooled with only 25% of the 13 million trading. So that creates a very tight share structure upon listing. The remainder of the 5-cent seed shares will be released in 25% installments over 9 months. Now, all 10-cent shares, because of the prospectus, are going to be free trading once we're on the CSE. Currently, the company has raised $1.5 million so far, and we have a $1 million market cap. Now, a comparable for us as a study would be Melchior Resources, MKR, similar shares outstanding, also gold exploration in Quebec, currently trading between 95 cents and $1. Another junior explorer out of Quebec is Clarity Gold Corp, CLAR, sitting between $1 and $1.10 range. So Hawkmoon Resources is a smart buy at just 10 cents. This could be the last time you see us at this price, hopefully. With the 15-cent warrant that's good for 2 years, there's a significant upside. And as previously mentioned, all 10-cent shares, because of the prospectus, will be free trading. I want to thank you for your time, and much appreciated. Take care.
Thanks very much, Brandon. We're going to introduce our last speaker, Paul Gill, the CEO of Lumico Metals. Paul, please take it away.
Hi there. Thanks very much, guys. I'm here to represent Lumico Metals. During this presentation, we'll be making some forward-looking statements. What we're interested in is graphite in Quebec, and using that graphite material in lithium-ion batteries is the market that we'll be looking at. Highlights, primarily we're focused in Quebec. We have a number of different assets, but primarily what we're looking at is the Laloute project, which we've got a joint venture going with Quebec Precious Metals, and we'll be up to 100% interest in that. We've completed a number of drill holes, have one resource, and also have a number of drill holes that are not in the resource. So we'll talk about that going forward. What we're looking at right now in the market is a real sea change in the way people consume vehicles. And what you see is a chart of where electric vehicles are going and where we are today. So we know that there's going to be a number of new vehicles on the road. All of those vehicles are primarily those vehicles will be lithium-ion battery run, and each one of those will have graphite in them. So what's also happened is internationally and locally, there's going to be a number of different mega factories built that'll have these lithium-ion batteries being built, which require that graphite material. So I think each one of those will require at least one mine's production per year. So I think that's an indicator of what's to come. As I said before, 15 times more graphite than lithium in an EV battery. And what you're seeing is that about 92 kilograms in a Tesla, which indicates, I think, that there's going to be a large amount of graphite that's required year over year for the next 10 or 15 years to meet the demand. What's graphite all about? Why is it important? Well, it's a very good conductor of heat and electricity, and has the ability to not expand when charged. It's primarily used in the anode of the electric vehicle battery, and so you have nickel and lithium in the cathode and graphite in the anode. It's turned into a spherical graphite material, and that's the most important upside for this particular industry, even though there is other uses for the material. As you can see, refractories, batteries, foundries, lubricants are all markets for this particular material, but the most important growth is coming from electric vehicle batteries. Here's an example of exactly what I mean. If you can see, the number of different graphite materials out there usually are under $1,000 per ton, but the spherical graphite used for EV batteries is $2,700 to $2,800 per ton. So that's the market we're going after at Lomiko. Recently, that's very important announcement made by US and Canada. They've made an agreement to take supply specifically from North America for the critical materials, and graphite, lithium, cobalt, manganese, and helium and gallium and all these other ones are considered part of that critical metals. And so we're part of that factor, and that is going to create a good updraft and interest in Lomiko. So where are we at? We're near the port of Montreal. As you can see, there's a purple circle there where the property is, and a blue circle where the port is. There's obviously roads in between there. It's 2,800 hectares, and it's very close to the Imerys carbon and graphite mine, which is only 53 kilometers to the north and has 5.2 million tons of 7.42%. And I want you to keep that in mind. We currently own 80% of it outright. It's open pit, and we're going to 100% on it. So those are the anomalies we've looked at recently. The graphene battery zone is already a 43 resource, and the refractory zone is coming. So here's the graphene battery zone. So the top end numbers, if you look at the 3% cutoff, are 4.1 million tons of 6.5% graphite. That's quite close to the Imerys number. But then if you add in the inferred, which we hope to convert, we're looking at a very, very good number. But still, it would only be about top 20 in the world for graphite properties. We want to be in the top 5. So what we did was we continued to drill, and we have found a very good number of drill holes in the refractory zone that are 10% plus. Those are going into the 43-101 and again into the preliminary economic assessment when it's completed. So right now what we have is a 900-meter strike length in that new zone. None of those drill holes have been included in the resource, so we hope to get a very significant increase in the tonnage and in the percentage of graphite. So the updated 43-101 is next. We haven't had any hints of sulfur. This is very important. But what the main thing is our valuation. Right now, we stand at 112 million shares out and fully diluted over only 179. But really, that's only a 4 or 5 million market cap because we're trading at a very low number of share price of 4.5 to 5 cents. So that's it, guys, and thank you for your time, and we'll enjoy the question and answer.
Okay. Well, thanks very much, gentlemen. Great overview from all three of you. At this point in time, I'd like to introduce to the panel Alan Turner. Al is a professional geologist with Stantec and also president of the Calgary Mineral Exploration Group chapter. Alan, great to have you here.
Thank you, Sam. Sounds really good. Okay, I'll start off with some questions. And the first question is for Jack. So in Mexico, the surface rights of the land are owned by local communities called ejidos. Permission from such groups are needed for companies to obtain access to their project locations and undertake exploration, construction, commercial operations. Do the local communities in Guatemala have similar communal land ownership agreements? And that's the first question. And then what style of agreements does Bluestone Resources have in place with the local communities? And what are the duration of these agreements?
So it's a little bit similar to what you're describing in Mexico as it is in Guatemala. However, we purchased the land outright and we're registered with the National Register of Guatemala. So we've purchased all the land required for development. And this concession was actually purchased by the previous owners prior to us picking it up. So we've still got, I think, 20 years on our license, and access to the project is via a municipal road, so that we share with the melon farmers and ranchers that work in the area. But the area is basically structured in a way that, you know, the land around the municipal road around the mine site is organized in which it's owned by families or companies that are doing agricultural work there.
Okay, great. Thanks, Jack. I'm going to move on to Brandon. The Romeo property is located on Category 3 lands. I got that from your technical report, which is land that's shared between Indigenous and non-Indigenous peoples. The Indigenous have some specific hunting and harvesting rights on the land. Although the land is shared, is Hawkmoon Resources completing discussions with local communities to make them aware of the proposed activities? And if so, how are these discussions progressing?
Thank you. Discussions are going very well. We have a personal relationship with the local chief in Waswanipi. And actually, the two of us went to a Canadians game against Toronto. So the company is basically following their recommended advice, and we're not doing any work on the property in September during moose hunting season. For obvious reasons. And then we're also being mindful of their line traps, which come through a portion of the property. So consistent communication with the local groups going forward is high on our list of priorities.
Great. Thanks, Brandon. Moving on to you, Paul. What is involved in the processing of the graphite to attain the commercial grades? And what is the targeted purity for the graphite product that you're seeking?
Yeah, thanks very much, Alan. It's a very important situation to consider because graphite itself has a number of different purity and weight sizes. So number one, for instance, electric vehicle batteries need 99.99% purity. And so the way to process that is to find first a deposit that's going to have a rock that will allow the graphite to be liberated. So we've got part of our deposit hosted in a marble gneiss. Marble gneiss is fused marble with grains of graphite in between and embedded in. So when you process that material, you crush it, and then you would do a flotation, and then the graphite floats and the marble sinks, and you get a good recovery. So, of course, then it's sorting because you have to organize first the large flake, and then you can organize by purity as well. But there's a number of markets for each one of those, anything from pencil lead up to refractories and steelmaking uses, and then all the way up to electric vehicle and nuclear facility uses.
Oh,
you're on mute. Oh.
Thank you. Thanks for that. Appreciate it, Paul. That was a good explanation. So, Jack, moving on to you, you mentioned the Maida geothermal field and its proximity to the Cerro Blanco project. Does Bluestone Resources anticipate that the Maida geothermal field could potentially provide, at some point, all of the required power to run the Cerro Blanco mine, or would this power be supplemented? And I guess another question is, are the economics of using geothermal energy competitive with more conventional fuels?
So we have this adjacent to the Cerro Blanco property is the Maida geothermal project that Goldcorp, actually, which was the previous owner of Cerro Blanco, sunk a lot of capital and resources into, because we did not have a substation near the project site, which meant we were struggling to, or they were struggling to find sources of power to generate for the property. There is a very unique opportunity for us to further develop the Meadow geothermal project, because there's already been, I think, 18 wells drilled and flow tested. So we can see that there is potential to generate power. And I think for us, it's very interesting and something that we would definitely follow up on. But right now, what we're contemplating is powering up the mine through connecting to a new substation that was built just outside of Asuncion Mita, which, as the crow flies, is less than 10 kilometers from our project site. But what we do believe is that Guatemala is very keen, and this is through talking with the vice president and the minister of environment. When I was down there in February, they want to see new renewable sources of energy coming into the system in Guatemala. And so for us, we're permitted to generate up to 50 megawatts. We would only need around 15 or 20 of that. So the opportunity to provide power to the mine, but also sell into the grid is very unique. And also from a ESG standpoint, I think it's very attractive for us, because we could become one of the first gold companies to power their project through renewable energy sources. So we'll be following up on that, but right now the focus is Cerro Blanco and getting that into production and tying into the existing grid already.
Okay, thanks, Jack. Paul, back to you. Another graphite question on how competitive the market is, and just wondering how complicated it is to secure contracts in the market. Can you speak to that?
Yeah, absolutely. It's a very interesting market. It is a fractured market because there's a variety of end users. You have, as I said, for steel makers and foundries, and then you also have electric vehicle, lithium-ion battery megafactories that are purchasers. So what we see now is a lot of production has come in the last few years from Mozambique, primarily the Sura Resources mine. That was a very large deposit, but not very good purity, and that was produced and shipped to China, and they converted to lithium-ion batteries. So it's been crushing the market for a little while, but now that we have this agreement in the North American sphere to create a supply chain within North America, I think we'll see suppliers here in North America getting a competitive advantage. Certainly, we don't want to depend on Chinese materials for the next little while, graphite being one of them, but also lithium and other ones, or even lithium-ion batteries made from China, because I think it causes a big concern, especially when there is some potential conflict going on, and or even just as COVID showed us, the supply chains can be damaged quite extensively. Right now, the USGA is showing that you're getting a reduced amount of graphite coming into North America from China, which is a good thing. And so we can supplant that with projects here in North America.
Okay, thank you, Paul. Just a second here, just having a computer glitch. Small one. There we go. Okay. Brandon, moving back to the Romeo property, I guess in the area, just kind of looking at some of the your neighbors, it seems like exploration is really targeting the structurally controlled gold deposit style, as well as intrusion-related gold deposits. And we know that from what I've been reading, the intrusion-related styles is associated with your direct neighbors, the Windfall deposit that Osisko has, as well as a Gladiator that Bonterra has. Can you speak to the observed potential for intrusion-related deposits on the Romeo property?
Sorry, Brandon, we can't hear you. Turn the video off.
Yeah, it certainly intrusion targets is what we've considered, and our exploration has been designed and built to test that possibility. We're trying to emulate what Bonterra and Osisko are already doing. Since these measures are finding success, we're just using a lower scale based upon budget at this point. But we'll have more results coming soon from the assays that will be going to the labs, as I had mentioned, and that'll give us a better indicator to where we would put drills in. Drill program most likely would happen November, December, or possibly January of next year, depending on permits.
Okay, thanks, Brandon. Jack, back to you. Now, on page 7 of the slide that you showed, or the presentation, there was gold and silver recoveries were quite robust. It appeared very robust, and that made me kind of think that you're dealing with maybe other convention or other maybe more advanced recovery methods, such as carbon and leach methods, or other possible methods that you're implementing. Can you speak a little bit to the metal recoveries? The silver intrigued me quite a bit, and as it was really high.
Certainly. So in the feasibility study, we contemplate a conventional 3-stage crush grind CIP circuit, which is similar to a CIL, but the grind size of this is much finer than what you would find in a typical low sulfidation epithermal gold project. So it's around 53 microns, and what that means, it helps us liberate and ultimately get higher recoveries. But on the pre-leach, we have an atmospheric pre-oxidation tank, so that allows us to increase and enhance our recoveries and lower the cyanide consumption required. What we're doing now is optimizing the flow sheet based on test work that we've been undertaking over the past months since the feasibility study was released, and we're even looking at simplifying that further. So luckily for us, because of the mineralogy in this deposit, we don't need a flotation circuit, and we don't need to produce concentrate. So it's 100% doré production, and therefore the flow sheet is quite straightforward and self-explanatory when you're looking through the from the front end out into the back end. So there is further room for optimization. We have a gravity circuit currently in there, which will be capturing the free gold, but we could even take that out for lower capex and still maintain those recoveries. So things like that are what we're still working through as we are in this current optimization phase, prior to finalizing the flow sheet and then getting ourselves into a position to put orders on long lead items. And we're targeting to put orders on long lead items in Q4 of this year, so that there's around a 48-week lead time, so that we'll be ready to get ourselves into production by the end of 2022. So it's a condensed construction timeline, but because of its size and the work that's already been done, we're in a position to have quite a simple flow sheet here. Great,
thanks, Jack. Brandon, on the Romeo property, at this point, you've conducted total field magnetometer surveys and VLF electromagnetic surveys, and I assume that this is to identify obviously the conductors, but also then the structurally complex areas. Have you identified areas that you would consider at this point favorable for drilling from those geophysical surveys and structural kind of assessments?
Just the other day, I put out news showing photos of the excavator on site. It's been able to scrape off overburden and expose 3 anomalies to the southwest portion of Romeo. And with those, we're pretty excited because the pictures seem to indicate there's some good mineralization. Tom's pulled up portions of that right now as of today. And like I say, those will be going off to the laboratories at ALS. We'll have a lot more information in about a month or so when we get that back. But yes, we're very excited about where things are headed, on this project.
Okay, thanks, Brandon. Paul, moving back to your project. In the past, the Emera's halted production on the Timcal mine due to high graphite product inventories. Now, granted, that was quite a different market than we're dealing with now, but I guess it does bring up some questions that although there's a proposed long-term consumption is anticipated to be very high for graphite, does your company have enough storage capacity or dedicated investor base to weather those sort of short-term periods of lower consumption?
Yeah, I think there is storage capacity at the Port of Montreal, where we would likely store that material for immediate shipping if and when we were producing. But most likely, I think the best way to deal with that is to have offtake agreements in place, which means that the material would be pre-sold and then stored at the customer's location, and also their money would be stored in our coffers, which I think is the best scenario. I think that inventorying is a good concept for a big company like Imerys, simply because they can control the market a little bit in that regard. They're selling a lot of material to GraphTech, which is a company that does heat sinks for lighting in stadiums. Now, they might change that simply because there's not a lot of stadium activity happening now with COVID. But at the moment, they have their certain strategy that's shifting over into electric vehicles and electric vehicle materials. So primarily, I think offtake is the only and the best solution rather than inventory.
Okay, thanks, Paul. Jack, this is another question for you. This one focuses more on the exploration potential. So the regional picture on your website shows the resource area and some regional exploration highlights with very, very strong gold numbers. Has your exploration team found regional evidence for extensive hydrothermal brecciation that might act as fluid conduits outside of the current resource area? And I guess another question about that is, what rough percentage of area to date has been mapped in the surrounding exploration targets at this point? Can you speak to that?
So our concession runs about 5 kilometers north-south and about 1 kilometers east-west. So we've got quite a good land package there, and of course the Cerro Blanco deposit only makes up a fraction of that area. And we have done some geochemical sampling of the soils and found that there is, gold content in the soils. And the previous owner, being Goldcorp, did sink in some capital to do some exploration activities. And they've drilled some pretty attractive targets in the past. I think one of them is around 7.6 grams per ton at 13.5 meter true width. So that's a cluster of veins for sure, north of the Cerro Blanco deposit. And for us, we believe that there is a big potential to find satellite deposits within this concession. And so once we get into production or late stage development for Cerro Blanco, we'll definitely be following up on those targets. We have the data, and we've done some mapping of the area to show that there is a potential to follow up on a lot of these targets. And not just the Cerro Blanco concession that we control now, but within the country of Guatemala, I think there's a lot of prospectivity. And if we can prove that Cerro Blanco can get into production, sustainably and on time and on budget, then I think we have a good opportunity to work further with the country of Guatemala on following up on some other regional targets. So that's our position with how we're going to approach the work we're doing in the country.
Great, thanks, Jack. Paul, another question for you. Your presentation mentioned that there were 21 holes completed in 2019. Has additional drilling been completed in 2020, or is the main focus this year being to complete the updated resource estimate and move forward with the engineering studies?
Yeah, I think we have a sufficiently large deposit based on those previous holes at the graphene battery zone and the two campaigns that have happened at the refractory zone to go to metallurgy, 43-101 resource, and then the preliminary economic assessment. I think that's the best way to go. There would be more drilling when we get to move to proven and probable under a feasibility study. But I think the first stage, preliminary economic assessment, is the target right now. That'll create a valuation for the project, an economic argument, and then that will really propel, I think, the situation for us to go and attract capital partners to take it to another level.
Okay. Thanks, Paul. Brandon, last question here. As you mentioned in your presentation, the Hawkmoon Resources did present a news release yesterday that announced the exploration in the Romeo property proximal to the Cisco lease boundary. You've kind of addressed it in some of the other questions I've asked you, but can you go into a little bit more detail just on the exploration goal of this program, as well as the technical expertise that you currently have on the ground conducting this program?
Yes, the technical expertise is Thomas Clark. He's overseeing things. We've got our project manager, Mike Lavoie, who's local from Val d'Or, and he's got his brother Serge, another prospector there. The idea is that completing this phase 1 in 2020 will set us up nicely for phase 2 in 2021. We are doing mapping and exploration as a priority at this time. The idea is that we prove out Romeo to be possibly economic for a buyout, or develop it into the next phase of defining what kind of possible resource could be there. The plan for the company is to bring in other projects, which we are looking at as well, into our portfolio. Quebec Gold is our focus, so I've got a couple of other ones that we're working on announcing once we get listed. These early days at this point, it's mostly, the advantage of this is that we are private, about to IPO, so the investors are looking at the stock, the amount of shares out as the main driver. With the property, it's certainly got some excellent blue sky, but at this time it does need a little bit more work. And we're in phase 1 of proving ourselves. So these types of exercises, being online with you fine gentlemen, is a great learning experience for me, and something that I can use as a launching platform for future success. Thank you.
Great, thanks, Brandon. At this point, Sam, I'm going to turn it back to you.
Okay, guys. Well, thanks very much for giving 3 great presentations.
Did you have any concluding remarks?
Sorry, can everyone hear me?
Mark,
okay.
Yep,
so anyway, everybody, thanks again for joining us here. Thanks for your attention. And again, thanks to our presenters. If you do would like to get in touch with any of the fellows here, please reach out to them. Their information's right on the website right now. So thanks again. Raj, thanks for hosting.
Yeah, thank you very much, Sam. Thank you to our presenters. For what Sam just said, Paul Gill, Lumico Metals, LMR, Jacqueline Dean, Bluestone Resources, BSR, Brandon Haynes, Hawkmoon Resources, currently private company. Thank you, Sam, and thank you to Sterling Capital, and particularly thanks to Alan Turner for the great questions, as always. Thank you, Al. Thank you also to you, our investors. Thank you for your time today. Do go to the company websites and CEDAR, learn more about these companies, and check in at TakeStockLive.com, where their presentations will be posted shortly. And a copy of this entire session will eventually go up there and on YouTube.
Thank you.
Yeah, thanks, guys. Until next Wednesday, 15 minutes after market close, when we have more mining companies presenting, be determined in your due diligence and ask tough questions. Signing out from Take Stock Live. See you later.
Thank you.
Bye, guys.
Thanks, guys.